Dear students, welcome to my channel, Dr. V.R. Pudile, Professor of Management and Economics. In this video, I am dealing with meaning of EBIT and EPS analysis, format of EBIT and EPS analysis, advantages and limitations of EBIT and EPS analysis. EBIT and EPS analysis. EBIT and EPS analysis gives a scientific basis for comparison among various financial plans and shows ways to maximize EPS. EBIT means earning before interest and taxes. EPS means earning per share. EBIT EPS analysis may be defined as a tool of financial planning that evaluates various alternatives of financing a project under varying levels of EBIT and suggests the best alternative having highest EPS and determines the most profitable level of EBIT. The EBIT and EPS analysis as a method to study the effect of leverage essentially involves the comparison of alternative methods of financing under various assumptions of EBIT. A firm has the choice to raise funds for financing its investment proposals from different sources in different proportions. For instance, it can 1. Exclusively use equity capital, 2. Exclusively use debt, 3. Exclusively use preference capital, 4. Use a combination of equity capital and debt in different proportions, 5. Use a combination of equity capital, debt and preference capital in different proportions, and 6. Use a combination of equity capital and preference capital in different proportions, and so on. The choice of the combination of the various sources would be one which, given the level of earnings before interest and taxes, would ensure the largest EPS. In this slide, I had given format of doing EBIT and EPS analysis. In the table, I had taken particulars in first column and financial plan and amount in the second column. Firstly, we need to take EBIT, earnings before interest and tax. We need to subtract interest from EBIT to get earnings before taxes. Then we need to subtract taxes from earnings before taxes to get earnings after taxes. Then we need to subtract preference dividend from earnings after taxes to get earnings available to ordinary shareholders. We will get earning per share by dividing earnings available to ordinary shareholders with the number of shares. Advantages of EBIT and EPS analysis. In financial planning, EBIT and EPS analysis evaluates the alternatives and finds the level of EBIT that maximizes EPS. In comparative analysis, EBIT and EPS analysis is useful in evaluating the relative efficiency of departments, product lines and markets. 3. In funds performance evaluation, EBIT and EPS analysis evaluates whether a fund obtained from a source is used in a project that produces a rate of return higher than its cost. And 4. In determining optimum mix, EBIT-EPS analysis is advantageous in selecting the optimum mix of debt and equity. Limitations of EBIT and EPS analysis. 1. No consideration for risk. Leverage increases the level of risk, but this technique ignores the risk factor. 2. Contradictory results. It gives contradictory result where under different alternative financing plans, new equity shares are not taken into consideration. Even the comparison becomes difficult if the number of alternatives increase. 3. Overcapitalization. This analysis cannot determine the state of overcapitalization of a firm. Dear students, in this video, I had explained EBIT and EPS analysis. Thank you.